First, let's talk about what a dividend stock is and how you generally get paid. A dividend stock is when the company pays out its earnings as cash payment to the shareholders. Usually, companies that are well established but not having a lot of growth will pay out higher dividends to their shareholders. And if you look at stocks like Amazon, Google, and Meta, they don't pay dividends because their share prices continue to gain over the years and possibly over the next 5 to 10 years. And those companies would rather use their earnings to reinvest into their business to grow their companies even bigger, right? And if you look at stocks like, let's say, Southwest Airlines, Texas Roadhouse, and McDonald's all pay quarterly dividends because they use consistent dividend payouts to attract new investors and show the strength that they're going to continue to have positive earnings going forward. And they're not necessarily growing as fast as some of the tech companies I mentioned. So they use dividends to attract new investors. And the formula for the dividend yield is the annual dividend per share divided by price per share. So, for example, let's say if the stock's annual dividend rate is $2, okay, and the stock price is $50 a share, and then your annual dividend yield will be 4%, right? So because $2 divided by 50 will be 4%. And just keep in mind that the dividend yield changes when the stock price changes. The yield will rise when the stock price drops, and the yield will drop when the stock price rises. So let's say I buy a stock, ETF, or mutual fund for, let's say, $10,000. Okay. And the price per share is $50 a share. I have a terrible handwriting, I know. And with the $2 per share in annual cash dividends. And this means that I have 200 shares, and it pays me $400 in dividend payments every single year, right? And when I'm choosing a stock to buy, the easiest way for me to look at the annual dividend payout is by just looking at the current yield. But if it's yielding 3% with a, let's say, quarterly payments, 10,000 with 3%, okay, then that would be $300 a year, or what is that? $75 per quarter, because 10,000 multiplied by 3% is $300, right? And speaking of quarterly dividend payments, so most stocks, ETFs, and mutual funds pay their dividends on a quarterly basis. Some companies choose to pay out their dividends semi-annually or annually. And I think the company Activision Blizzard, before it got acquired by Microsoft, now I think there are some lawsuits for the acquisition, but they used to pay annual dividends rather than quarterly dividends. And I'm not sure if they're still doing that. Walgreens Boots Alliance, for example, pays dividends every quarter in March, June, September, and December. JP Morgan Chase pays out their dividends in January, April, July, and October. And let me think of another stock, Valero Energy Corporation. They pay dividends to its shareholders in February, May, August, and November. So theoretically, if I own those three stocks, then I will receive dividend payment every single month. And sometimes a few companies will pay out extra dividends to their shareholders on a non-scheduled dividend payout date. Now, remember when I owned Costco stock, I don't own it anymore. And Costco decided to pay out what's called a special dividend. And it happens with like a lot of companies too, but they pay out their special dividends to their shareholders because 2020 and 2021 were really good years for them, right? And none of them are obligated to pay special dividends to their shareholders. But when it happens, it's usually because they have excess cash available on their balance sheets, or they want to show confidence in their long-term value. And valuation matters to me when it comes to dividend investing. I don't want to buy something too high of a value with a stock that pays dividends. But it's an entirely different story when it comes to growth stocks, and which is a video for another day. And here's some dates that you need to be aware of when you research dividend stocks, ETFs, and mutual funds. First, the declaration date. And that is the date when the company makes an announcement that it will be issuing a dividend in the future date. And you can go to their SEC investor relations page, and I'll give you the memo declaration of, this is how much we're paying in dividends and stuff like that, right? And second, the record date is when the company looks at its current list of shareholders to determine who will all receive their dividend payment. So let's say fireside chat, right? Let's say my corporation is paying my shareholders dividends, and I'm going to look at a list of all my shareholders to decide who are eligible to receive their dividends. Okay. And the third is the ex-dividend date. So this is the date when the company determines which of its shareholders will be entitled to receive the dividend payment. And only these shareholders who hold a company stock prior to this date are entitled to receive the company's dividend. And finally, fourth, this is the payable date. This is when you get the check, right? This is the payment date. And that's when the company pays out the dividend to the eligible shareholders. So when you research the stock and you see ex-dividend date on their website, but that's not the same as the payable date, all right? And you can get all this information again on the earnings report when you search for the investor relations website. So if you want to research Apple, just Google Apple's investor relations.